Howdy who, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, what do we got going on in the markets today? We're having a big update. Dow's up about 140. NASDAQ up 220. Markets is off to the races, right? Now, we talked about that. We had that little 9% pull down on the NASDAQ, about 7% on the S&P, and now we're getting that little bounce. That little bounce is going to take us right up into the resistance level, into the 20-day probably, right around 44.50 on the S&P. We're at 44.30, so we're almost there. We can start coming down. Now, we got a big week still ahead of us. I know it's already Wednesday, but we got, well, after the market closes today, we got NVIDIA coming out with earnings, right? Now, NVIDIA's had this incredible run. It's the AI stock, the darling of the AI stocks. I mean, it is the bellwether. Will it go higher? Will it break $500? I don't know. I think it's ridiculously overpriced. I wouldn't be playing it in either direction. But that's coming out after hours today, and that's going to dictate what the market does tomorrow. Now, also, we got the Jackson Hole meeting of the Fed, and Jerome Powell's going to be talking on Friday. Both of these could push that market right up into resistance, but I do think we're going to come back down. I think we're going to go lower. That's just my take. Your take could be completely different. Now, before we get into the real estate market, I want to talk about the banking system. All right, so the banking system has a lot to do with the real estate market. Now, everybody's coming out with these downgrades, right? Moody's comes out and downgrades the banks. S&P comes out, downgrades the banks. And Fitch, they just come out and downgrade the whole U.S. But we're having this crisis here in the financial world. Nobody's really talking about it all that much. They're trying to just push it away like it doesn't matter. Look at it. The banking system comes down. It's going to be terrible. It's going to be terrible. And right now, we got a lot of banks being downgraded. A lot of banks have already gone under, like 4 of the top 40. 10% of banks have failed this year. I mean, this is Great Depression stuff, but yet nobody's talking about it. It's very fascinating to me. Banks make me very nervous. I see I have money in the bank still. Now, I don't keep a lot in there, but I do have money in the banks, and it makes me nervous. And banks, they're going to do what's called the bail-in. When the banks fail, they're going to take your money. They're going to steal from you. Called the bail-in. You can Google it. Google banks bail-in. It will explain how they're going to steal the money from you. See, the government, the FDIC, they're not going to have enough to bail the banks out, so they're going to do what's known as a bail-in. And mark my words, this will happen, and this is serious. People are taking this way too lightly. We're in the midst of a financial system crisis with the banking system. Now, this is just my take. This is what I believe. Now, okay, let's get over to the real estate market. Now, a lot of people make fun of me. I know my view's it's not a popular view if you're a mainstream sort of person. You know, when you go to a party, do not talk to people about this stuff. Do not talk to your friends and family about this stuff. They get very upset when you tell them their house is going to drop by 40 or 50%. I know that's not a popular view. Really not a popular view if you just bought your house. But a lot of people are telling me, but Mike, it's so much different than 2008. We could not possibly drop that much. Now, in 2008, we only dropped 34%, but this time we're going to drop 40 to 50% because the bubble's bigger. Now, I do agree it's very different than 2008. Now, right now, the debt to income ratio, okay, is at a record high, meaning houses have never been more unaffordable in the whole history of the world. Houses are the most unaffordable they've ever been. Now, right now, we are pushed up to the average is a 42% debt to income ratio. Now, we hit the record high back in 2007, 2008. That was at 38%, but we pushed above that to 42%. We are in a completely unaffordable situation, and that's why the housing market is locked up. It's locked up. I mean, nobody's buying houses just because they can't afford them. Very simple stuff. But okay, so back in 2007, 2008, now I was a broker back then. I've been a broker forever. I'm an old guy. I've been around the block once or twice. But okay, in 2007, 2008, what were we doing? We were doing this subprime stuff, right? We were doing all these no documentation loans. You didn't have to prove your income. You could just say you made the income, and that was fine for the lenders because houses were going up so much and everybody's making money. So we could just state what our income is, right? I mean, you could say you're making $250,000. You could say you're making $500,000, and nobody's going to check on it. Nobody's going to check on it. But here's what they're going to give you. They're going to give you this piece of crap. An ARM, an adjustable rate mortgage loan, is what they were handing out to these people that had no docs, had no proof of income. They didn't care. You could have been a homeless person, walked in. If you were breathing, you could have got an adjustable rate mortgage, and that's what happened back then, okay? So this was a subprime mess, and everybody say, but Mike, everybody's got a 30-year mortgage locked in at 2.8%. We're going to be fine this time. Well, maybe we are, maybe we're not, but we were given loans back in 2007, 2008. Now, I'll admit these people should have never been allowed to get loans, but they couldn't make the payments. They stopped paying. They stopped making their payments. Okay. And now what's interesting, a lot of people today are stopped making their payments, but we call that a moratorium. We don't have to make our payments now because they aren't foreclosing on you. They're giving you, they're rearranging the loan, putting you out to a 40-year, a 50-year, putting you on forbearance. A lot of things are going on today. But today is very different. The reason the debt to income ratio is so big, it's so large, 42%, the record ever, the most unaffordable house has ever been. It's different, and it is different. It's because of things like inflation, right? Because of cost of insurance, your car insurance, your home insurance, credit card debt, record high, just hit $1.03 trillion. I mean, they were just shooting through that. Why? Because nobody has money, so they have to borrow this money, and this money's expensive, 20, 25%. People don't have money, and they don't have money because they have auto debt. Auto debt, a lot of people aren't paying their bills anymore, not paying that auto debt, and they're getting their cars repossessed. Very common. Student loan debt. We haven't paid student loan debt for 3 years, but now we're going to start paying on it? Really? Well, I don't think that's going to work personally. I think that's going to be a big problem. A lot of people have medical bills, but here's the thing. The big thing that's coming that people aren't talking about because they're trying to just push this away. They're trying to tell you this is never going to happen. Well, it's going to be the unemployment numbers. Unemployment rate's going to skyrocket. Now, why do I say that? But Mike, unemployment rate is at a record low. We got Bidenomics going on. Bidenomics has everybody has a job right now. It's not a problem. Look at the recession. It's gone away. We're not ever going to have this recession. I agree the recession's been pushed out a little bit, probably start at the end of this year, beginning of next year. That's where the recession's going to hit, and that's going to create these job losses. We're seeing the layoffs. I live in Silicon Valley, and believe me, the tech industry is laying people off. A lot of unemployed people around here trying to get a new job. That's what's going on in Silicon Valley right now. The layoffs have hit and people are looking for work. Okay, so those unemployment numbers, they're kind of doctored up. I really don't believe them, to be personally honest. But okay, so we're going to get this mass unemployment, and that's going to dump a lot of inventory. A lot of inventory is going to be dumped onto the housing market. Okay, and what people don't get, you see, people don't understand this, right? They don't understand that homes are sold at the margin. Okay, all right, so I mean, how do you explain this? Okay, look, your house is worth $1 million, right? And you got a lot of equity. I agree, there's a lot of equity in there right now, and your home's worth $1 million, but your neighbor just sold his for $800,000. Can you believe that neighbor of mine sold for $800,000? He doesn't know his house is worth $1 million because my house is worth $1 million. He's right next door with the exact same house. How could he sell it for $800,000? We see that's what at the margin means. It just means that your house just dropped by $200,000. And when we sell at the margin, it's not going to take a lot to bring this market down 40 or 50%. You can have that big a drop with 2% of the people having to sell their house. And I think a lot more than 2% of people are going to have to sell their house. Now, there is a benefit to up being the first one out. Now, Billy Bob, he was the first one out. He got out at the top. But you can still get out within 10% of what Billy Bob sold his house at. And you can get a high price. And these prices aren't going to be there for very much longer. You see, days on market, it's taking longer to sell the house, right? Remember when there were all those multiple offers? Not multiple offers anymore. Right now, you're lucky to get an offer. 7.5% mortgage rate is slowing this thing down to a standstill. There's not the multiple offers, right? So it's the first person that makes it out that gets the most equity. See, you got all that equity, and there's a lot of that equity envy going around, man. You go to a party, people start talking about the equity envy. Then Tall Mike comes into the conversation, go, well, that's all going to be wiped out. People hate Tall Mike at the party, because he tells them it's going to drop 40 or 50%. I tell them this, I tell them directly, go look at, you can hold on to your house because I know you're locked in. You're locked in at 2.8 and you can hold on to your house as long as you want, but you can't hold on to the equity. The equity is going to be wiped out. Right now, it's just a trickle of homes for sale. People say there's no homes for sale. Like, we got over a 3-month supply of homes. You go on Zillow, you click a button, you can buy a house, right? Now, there are plenty of homes for sale. The problem is nobody can afford the homes, right? So what's going to give? What's going to give? Is their income going to shoot way up and all of a sudden they're going to be able to afford these prices? I don't see it that way. I suppose it's possible, right? It's possible their income goes way up. Here's what I see happen. I see layoffs coming. I see artificial intelligence coming. It's going to lay off millions and millions of people. There's going to be mass layoffs, and that's going to hit the market. Now, it's not hitting the market right now, and I'll agree with you. These are great times. These are the best of times, right? Enjoy these times because they're not going to last much longer, and people don't like when I come to the party and tell them that. I tell them their equity is going to disappear. Look, you can hold on to your house and they're going to die in that house because it's their forever home. Look, buying or selling a house is a personal decision. I can't make that for you. I own my principal residence. I'm going to hold on to my house, but I'm going to lose a lot of my equity. And I'm aware of that, but I love my house, love where I live. I have my friends around here. I know the people around here. I like where I live. I'm holding on to it, but I'm going to lose the equity. I can hold on to the house, but I cannot hold on to the equity. Now, a lot of people go, but Mike, my house would never go down. My area only goes up. We have multiple offers. Still a house comes on, sells in a week. It's impossible that my house would go down. Well, what we're coming into right now is a global recession. Now, China's kind of the epicenter for this evergreen situation, the country garden situation. They're having a banking crisis, just like we're having a banking crisis. They're having a lot of failure over there, and it's going to be all around the world. We have a big financial crisis right here that nobody wants to talk about. The Biden administration doesn't want to talk about. Everything's great. Everything's fabulous. Bidenomics to the moon. Where are my moon boys? Look, a lot of moon boys get upset when I say their house is going to go down by 50%. I'm sorry, but the moon boys, they love to watch me. They love to make comments. They think the stock market's going to the moon. I think the stock market's going to come in a lot. And when that starts coming in, you see people, when they start to lose money, when houses are going up, nobody wants to sell. Why would you want to sell? It's going to be more next month, right? It's going to be more. It's going to cost more. You're going to make more money. You're going to have more equity, and then you're going to be able to brag about all the equity you have because it's going up. Well, we look at over the last year, we've been flat, kind of a little bit down. But when it starts coming down in a stair-step fashion, 10, 20, 30%, you know what happens? You get this stampede of sellers. There'll be a stampede of sellers coming onto the marketplace. So it's starting to trickle right now. I mean, days on market's getting a little longer, inventories slowly creeping up. But when you get the stampede, it's too late. It's too late. I mean, Billy Bob, he's left long time ago. He knew when the getting was good. But if you wait and that stampede hits, you're not going to be able to sell your house at any price. And that's where people are going to be locked into their forever home because they got 2.8%. Now, I know a lot of people don't want to hear this stuff, and they think, my views are not popular. I get get that. Well, I can tell when I start talking with my friends. I can tell when I'm at a party that the whole group separates when Tall Mike comes over. And that's okay. I don't need to be popular. I'm okay with that. But you know who I'm popular with? The Moon Boys, because they like to make fun of me. They like to laugh at me. Look at that Tall Mike out there again saying we're going to crash in the stock market, saying we're going to crash in the housing market. Now, we're not ready for the crash in the stock market yet. It could happen. It could happen. But I just think we're going to just get this pullback. I mean, we're going to get a pullback down to, well, we're going to break that 4,000 level on the S&P and maybe even hit 3,500. That's my take. A lot of Moon Boys are expecting to go to record highs. We're going to make record highs this year, Mike. Hurry up, get in, buy this market. We've had a little rally, had a little relief rally. We're down 9% on the NASDAQ, and now we bounced up a little bit, but we're coming right up to resistance. If we can get through there, then maybe the Moon Boys have more of an argument. But I don't think we're going to get through there. I think we're going to come back in. Once again, this is just my take. If I'm Tall Mike, if you like this stuff, give me the thumbs up. Why not? Hit the subscribe button. We can talk more. There's a lot more to talk about. We got Jackson Hole coming up on Thursday and Friday. We got NVIDIA, man, they're going to move the NASDAQ one way or the other. NVIDIA, whatever direction it goes, the NASDAQ will be following. Get out there, everybody. Enjoy the day. I'm Tall Mike. Bye-bye now.